Welcome to The Explainer. Today, we're going to demystify the world of stock investing, and we're using some fantastic insights from the book Stock Investing for Dummies. So, you hear about the stock market, you see the charts, you hear all this jargon, and it just feels overwhelming, right? If you've ever felt that way, you are definitely not alone. But here's the thing. What if the real starting point isn't where you think it is? That's right. Before you even think about buying a single stock, the first step is actually to look inward. Seriously, the whole journey starts with your own personal finances. So your journey doesn't begin on Wall Street. Nope. It begins right at your kitchen table with a really simple but powerful tool, your personal balance sheet. Think of it as a quick snapshot of your financial health. It's a really simple but powerful comparison of what you own versus what you owe. And this isn't just some boring accounting exercise, It's all about getting financial clarity. It tells you exactly what you can realistically and safely afford to put into the market. So, the result of that little calculation? That's your net worth. It is your personal financial bottom line. You got to think of it as your starting position in this race. You absolutely need to know where you stand before you can even think about moving forward. And getting that number is as simple as these 3 steps. List your assets, list your liabilities, and then just do the subtraction. This is the homework. It's the one thing you absolutely must do before you risk a single dollar in the market. Okay, so now that your own house is in order, let's turn our attention to the market itself. The key here isn't to be afraid of risk, it's to understand it. Because, not all risks are the same, and being ignorant is actually the riskiest position you can be in. And boy, does this quote sum it all up. This has happened so many times throughout history. People get swept up in the excitement, they follow the herd, and they totally skip the most important step, doing their own research. And that, well, it leads to some pretty painful results. Just take drcoop.com, a classic story from the dot-com bubble. Investors got so caught up in the hype that they just poured money into the company. They saw all the excitement, but they completely missed the huge, blinking red flags in the financials, like, having 0 profits and a mountain of debt. And here's what happened. Look at that drop. It's like falling off a cliff. In just 1 year, the stock price collapsed from over $45 to just $2. Millions and millions of dollars just gone. All because people bought the story without checking the facts. And listen, this wasn't just some dot-com era thing. Let's fast forward to the 2008 financial crisis. Even a Wall Street giant like Bear Stearns wasn't safe. The data was public. It showed their massive exposure to bad mortgage debt. But just like before, so many investors just weren't looking at the fundamentals. So the big question is, how do you avoid these disasters? Well, it all starts with learning how to tell the difference between different types of investments and, basically, arming yourself with the right toolkit for research. First off, it really helps to understand 2 basic kinds of stocks. You've got your cyclical stocks, think of these like roller coasters. They do great when the economy is booming, but they can take a serious dive in a recession. And then you have defensive stocks. These are more like lighthouses. They provide stability because they sell things we need no matter what, like food or electricity. And it's not just about traditional companies. There are other really powerful options out there. Take REITs, for instance. They let you invest in a whole portfolio of real estate properties. We're talking shopping malls, office buildings, all without ever having to be a landlord. So if you're a beginner, this is super interesting. REITs give you a way to get the potential stability and income from real estate, but with the convenience and low entry cost of just buying a stock. It's a pretty unique way to diversify your portfolio right from the get-go. Now, here's something you absolutely can't forget. Individual stocks, and even entire industries, they don't exist on their own little island. No, they're all part of a much bigger, interconnected global economic story. Okay, this number, it's almost too big to even wrap your head around, but it absolutely matters. This massive amount of debt affects everything from global interest rates to government policies, and that in turn creates the weather system that your investments have to sail through. Now, being aware of these huge trends isn't about trying to predict the future. It's about understanding the currents you're in. For example, high government debt can lead to higher interest rates. That makes it more expensive for companies to grow, and that can directly hit their stock price. See, it's all connected. Whew, okay, we've gone all the way from your personal checkbook to the entire global economy. So after all that, what is the single most important thing you should take away from this? It all boils down to this: empower yourself with knowledge. Your greatest asset isn't some hot stock tip from a guy on the internet. It's your ability to find information from lots of credible places and to always question who's giving you that info. And the best part is, the tools are all out there for you to use. The SEC's website is like a treasure trove of official company documents. Financial publications give you deep analysis. It's really just about taking the initiative to use these resources to get a full, unbiased picture of a company's real financial health. Look, your investing journey is a marathon, not a sprint. And it all starts with building this solid foundation, understanding your own money, understanding the real nature of risk, and knowing how to do your own homework. You've got the foundational knowledge now. You have the launch pad for your investing journey. So the next move, well, that's up to you. Thanks for joining us.